Hello, Namaskar. You're watching BTTV. I'm Tanya Neja. Well, we all have been talking about mid-cap and small-cap space. It's the talk of the town, and the broader market space continues to be under huge selling pressure, especially after market regulator Sebi raised concerns over froth building up in the segment. Not only that, the Association of Mutual Funds in India, that is Amfi, directed mutual funds to go for stress tests every 15 days. Results will have to be made public in a standard format on 15th of March every month. The funds will conduct stress tests on mid and small cap funds to evaluate liquidity and risk parameters in the event of sudden heavy liquidation request. So what we are going to do today, we are going to decode the stress test for you in this video. Firstly, the question is, why stress test? Well, the decision to undertake a stress test was taken earlier this month following discussions between Sebi and mutual fund body Amfi. Remember, the small and mid-cap funds have been drawing massive shares of retail inflows over the last few months, far more than the money coming in large cap funds. Now, assets under management of small cap and mid cap schemes hit 2.49 lakh crore and 2.94 lakh crore rupees respectively in Feb 2024. Both are records for the two investment categories. Now, the market regulator is concerned about the over-exuberance and froth building up in some pockets of the broader market, and the Sebi chairperson even said that the valuations of some stocks in mid and small cap segments seem to have gone off the charts. So what are these stress tests? Well, these are the tests that are aimed at finding out if small and mid-cap funds can meet redemption requests in an orderly manner in the event of a market fall or extreme volatility. Stress testing checks the resilience of companies as well as investment portfolios against hypothetical possible future financial situations. To assess mutual funds' claim of instant liquidity, the stress test evaluates the liquidity of a portfolio by calculating the time required to sell 25% and 50% of its holdings. So investors can see how soon they can get their money back if the equity markets were to collapse or there is a rush to redeem. According to the Sebi chairperson, every mutual fund will carry the disclosure about how numbers stack up in small cap and mid cap funds, so investors are aware of the possible outcome of investing in small caps and mid caps in a stressed situation. Not only that, mutual funds will soon start disclosing more data about mid and small cap funds, including average portfolio valuation and portfolio volatility, which is measured through parameters like standard deviation and portfolio beta. Now, if we look at the stellar performance of the broader markets, the BSE small cap index is up around 60% in the last 12 months. The NSE small cap 250 index has delivered similar returns. But if you look at the situation at this point in time, the mid-cap and small-cap indices both are trading in the red with deep cuts. By the end of the last week, about 428 or 45% of BSE small-cap index stocks were down over 20% from their 52-week high levels. So before we wrap up this video, let's also listen in to what Sebi chairperson Madhavi Puri-Buch has to say on these stress tests.
While the desire of the regulator was to be facilitative and to have a listing environment which is not as, I would say, as well regulated as the main board, because small and medium enterprises find it hard to comply with many of those requirements. The objective was appropriate. Are there some entities which are perhaps misusing that facilitative framework? We have received feedback that that is the case. The first step we took, as you know, was many of the surveillance measures like ASM, GSM, which earlier were not applicable on the SME board, have been made applicable there. And the principal objective of that is really to try and mitigate the risk of price manipulation. Having said that, the reality is that these are relatively small entities. The market cap is small, the free float is small. It is relatively easy to manipulate both at the IPO level and at the trading level. So is there something more that needs to be done? I think as a first step, we are clear that some more disclosure in terms of risk factors. So for investors to understand that the SME segment is different from the main board, the regulations are different, the disclosures are different, and therefore the nature of the risk is different. I think it's important for Sebi to underline that in terms of disclosures to the investors. The second is in terms of actual price manipulation, both at the IPO level and at the trading level. We are working to, I would say, to evidence that we do see the signs. We, as I've mentioned earlier in a press meet, that we have the technology to do it, so we are able to see certain patterns. However, as per our regulation, the way that we need to construct the entire case, we do need to take some time to do that in a robust manner. While the desire of the regulator was to be facilitative and to have a listing environment which is not as, I would say, as well regulated as the